right, good morning. How are you? Doing back there? Mom, I gotta use YouTube. Down your music. All right, welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Now, why would we do that? Well, you know what? We're trying to reduce our risk. And ideally, we have consistent returns. All right? Small lot sizes relative to our account size. We want low risk. We want consistent returns. You might want to Google Sharpe ratio. Yeah, risk-adjusted return. So anyways, today I guess we can talk, I suggest we just do some technical analysis. I don't want to talk fundamentals because this afternoon at 2 o'clock we get a Fed meeting release, and I'm going to do that live at fxbootcamp.com. And I'm sure for hours and hours and hours I'm going to discuss fundamentals. So why don't we just do technicals today? Let me know what you want me to cover. Just ask in the chat, and I am here to serve you. Now, these live streams don't cost any money, but they do come with a responsibility. Please leave a comment on the recording, perhaps something you learned today, and also click the thumbs up button. Tell YouTube this was quality content. Okay? Coach, will you send an email to join today's Fed? No, just log in. If you're a member of FX Bootcamp, just go to the community section and click on the meetup. There's no email. Maybe I'll send an email, but I don't know. So anywho, yeah, so a big Fed meeting day, big, very important day, and I'm super excited for it. It's going to be a good day. You might not even need an AK. So ask questions, get involved, let me know how I can help, and I am happy to do it. With that being said, I've been doing these live streams every day for 20 years. And I've probably taken, 6 days off? So anywho, I love what I do, and I love that we do this together. Thank you for helping me make a wonderful community like Forex.Today. I do believe we are making the world a better place. If you look in the description below, there's other resources that I've made over the last 20 years. There's a link to my book, Strategic and Tactical Forex Trading. Would you please leave a review on Amazon.com? There's a link to a free webinar called How to Triple Your Profits Without Changing Your Charts, or without changing your indicators, and while spending less time at your charts. And how to do all of those things for free. So if you want to know what the 3 secrets are and want to know how to do them for free, hey, the webinar is in the description below. There's a link to Quant-in-a-Box.co. It's a site that I developed to automate your macroeconomic analysis. And I'm doing some really cool research right now for some pretty amazing features in the future, like really, truly amazing stuff. Cool. So that's going on. There's a link to tradersway.com, a trustworthy, ethical foreign exchange platform, foreign exchange broker. I don't want to overpromise, but they have fast execution speed, narrow spreads, huge swaps, and above average good-looking employees. Beautiful. I'm telling you, beautiful. But no joke. You should check them out. Tradersway.com. Open up a demo and give them an opportunity to earn your loyalty and respect. They want to be a service provider to your successful Forex trading business. And they're like, hey, Wayne, we think your live streams possibly help people become successful. Yeah, sweet. Can we do Dow today, says Sydney? Only for you, Sydney. Faux show. So with all that being said, everybody, let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Okay. Oh, what do you think? You like the British banker tie? It's okay? Huh? Yeah? Okay. Sweet. Okay. Yeah. Dow. You want to do some Dow? No diggity, no Dow. Okay. Well, let's just pop a new one. Hang on, let me organize these. It'll look messy. Maybe I already got a Dow. I have S&P 500. I have DAX. I have Euro. Let's move the Euro 50. We'll go from Euro 50 to Dow 30. So you like it, the Dow, huh? Why do you like to trade the Dow, Sydney? Why do you like it, the Dow? By the way, I'm trading with my mommy fuel. I have a really tiny head. But I'm a Karen if I don't have my coffee in the morning. Sydney, so why do you like Dow? Any particular reason? No? Well, look, and I forgot. There was an update. Windows updated and my drawing tool doesn't work anymore. Nice. I guess maybe I need to work on that. Thank you, Microsoft, for wasting more of my time. Yeah, it just doesn't work. Let me see if it's running in the task manager. No? Yes. No. It is. Oh, and it's running 3 times. No wonder. So I'll end that task. So it runs 3 times now, huh? I don't think apps are supposed to run 3 times. But anyways. All right, Sydney still hasn't answered, so I'll just move on. But let me try to get my drawing tool going. And restarted the app. Oh, and this time it did work. Oh, there we go, Sydney. Right on. The rewards are worth the stress plus respect zones ain't like gold. Okay. All right, but dude, like, why the Dow? Why not the S&P 500? Why not the DAX? What do you like about this one? But anyways, whatever. Look, this is the projected top of the month of June. This is the dynamic level of support. So it really comes down to what you think is going to happen next. There's another value of support here, and that's really for next week's trade. So your first opportunity is continue mission. Failure, you might look like this. Okay. Remember, this is a very heavy multinational corporation type index of 30 companies. And are they equally weighted? I think they might even be equally weighted. Okay. Another way of looking at this is identify tops. So I'm going to draw that top. Well, I wanted that a little better. Okay. That top and this top. Okay. And then drop back into an hour. And you can see how important where we are is. The importance of where we are is how you would say it in English. Okay. So this is a pretty good top for the Dow. Okay. And so it could really start doing this now. And I'd say back to the 200 EMA. Huh? Maybe it's over, huh? Raise your eyes up to the sky. It's the last time you will. Well. Maybe it's the end, huh? So anyways, yeah, at resistance, pretty logical resistance. Yeah. Yeah, well, if you see the resistance, you know, what we care about is that everybody else sees it too. So, yeah. Frankie already took the top off. Huh? Chopped the top off of this sucker. Great. Okay, S&P 500, much different scenario. There's the S&P 500. Do we still have... I was going to see if I had Quant-in-a-Box still open. By the way, here's the meetup at FX Bootcamp, just so you know. You go to the FX Bootcamp community tab. And there it is. And it's going to be in the live room, so everybody has access, all members. So make sure you RSVP, please. Because remember, when you RSVP, it emails you the link. Alan wants a stock market course. Okay, sure. At a lower cost of less than $88? No. But will I do a stock market course? Yes. A macro-focused stock indices? Sure. I do plan on doing that. I do plan on doing a course on real estate. I do plan on doing a course on gold. And now I also plan on doing one on personal finance. Okay? And so what I typically do, because it costs me a lot of money to do these things, my time costs even more, but I don't charge for my time. So, but I do have a PhD help me put together the slide deck. And their expertise is in data visualization tools. So it's nice to have that collaboration. It costs me a lot of money. But so what I end up doing is I usually charge $200 or $300 to attend it live over the course of time that I do the course. The oil course was like 16 weeks long. So those that attend live, they get access to the material immediately, of course, and then they're there live. And then usually there's some bonus material for those that attend live. And then several months later, it's added to the course for everybody. You know, I understand that, Alan, and I don't, but there's not much I'm trying to help, man. Can't change the world, right? I'm trying to change the world. So, yeah. I mean, look, I used to charge it. What was it? I can't even remember now. It was thousands of dollars for the course. Now I charge $88. So I'm trying, man. I feel you, man. I'm trying now. Yeah. So like, I don't know. It's already reduced by 99%, right? So, anyways, I'm trying. I feel you, man. Yeah. So, anyways, I got you. I'm trying. Yeah. Anyways, so get ready for that. Here's the S&P 500. What do you stink? Yeah, still bullish. Okay. But we're getting a couple of deviations from the mean. So more up is becoming challenging, right? Well, you know, Sydney, it's funny. Sometimes I get heckled by people that say that I'm a jerk because I beg people for $88 and that I must be a loser. And I'm like, well, F you then. It's $4,000. Screw you, right? But of course, that's not the right response. But it's a weird world out there. People are strange. People are strange, right? Yeah. So I agree. I am a jerk, but not because I charge $88. Really? I mean, I guess I could put it back and charge more, and less people could benefit. But all right. So anyway, so lots of up on the S&P 500, right? Okay. German stock market, this is a great one to trade. You know, like when you look at this and then you look at the Dow, you're like, really? I mean, why not trade the DAX? Okay, I was wondering about that. So the volume's not good today? I need to be closer, right? I wanted to be a little farther from my charts. Okay, but hopefully this is a little better. I don't want to really be like this, but this is a very expensive mic, highly rated, and I'm very meh about it. I thought the other one was better. So I might just go back and get a new version of my old mic. My old mic is here. This was better. Yeah, the volume says I'm right on the cusp of the little red, so I'm yellow most of the time, between green and yellow, and that should be perfect. But I want to have the radio voice. And for that, you have to, like, make out with the mic, and that shouldn't be the case. All right, so anywho, so the German stock market's moving along just fine. Let me change the indicator to the right bias. Okay, that's good. You guys say it's fine. But again, I think the other microphones sounded better. The volume might be okay. But I really do like if it comes out like a radio voice, right? In sooth, I know not why. And I don't get that as much on this mic. I guess it's cleaner, but I prefer the radio voice. It should make me sound like a badass. I should sound like a badass. You're like, dude, this guy's a baller. Did you hear? And then you're like, no, it's just my mic, bro. It's just my mic. So anyways, it's interesting. I didn't know there was such a difference in mics. But all right. So anywho, what's going on in the world of technical analysis? Up, 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 down, down. This is the buy zone. Okay. Up, 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 down, down. Up, 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 down, down. And now we're up, 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 up. But you know what? People, for some reason, don't focus on this down, down. To me, it's all about the down, down. If I'm a bull, I love red candles. Okay? This idea of up, down, up, down, up, down. So today is already done, and this is something that I teach all the time at boot camp. All the time. If you show up to a New York session like this, and you're like, hey, what's up, fellas? Are we buying or selling? You've already lost all your money. You're already dead broke. You should probably go try something else. Maybe invest into soda machines. You'll get rich having vending machines all over the place. But what you should be doing in New York is saying, what do I want to do tomorrow? Oh, yeah. You want to do this tomorrow. Good. That's what you should be doing today. Today is about tomorrow. And in fact, what this chart says is you should have already made your profit today and you're done. You're already done today. You're like, what do you mean today? I'm done. And somebody else will say, well, what do you mean you're done? You're like, I already got the money in the bank. Right? So you could, of course, we have a Fed meeting coming up, and that will even affect the German stock market. But you could do something like this. Okay? The other thing you should make sure you do is make sure you have your OCOs running. Okay? So I have a 333. This may not work properly on DAX because it's that standard setting is developed for Forex, so you might have to adjust. But before you trade, you should always make sure you have the smiley face in the top corner. Okay? So your day could be like, well, I want to catch a pullback down to here. So that's that. You could have it here, but of course, if this does come down, this will come down. So, your first thought is based on price action. But you could start it here and just say, right? Okay. And now what happens is if price comes down, hits the green area, this is a buy limit order. So you will be put in, and your trade plan would look like this. Now your OCO puts a 33 pip stop. And again, you'd have to look at adjusting this because the pricing of a DAX is a lot different from a euro. But nonetheless, the common thing is a 333, or sorry, a negative 33 pip stop and a plus 333 pip above us. Okay? Because if I'm wrong, I want to take a small loss. And I don't even have to worry about the target. Don't even worry about it. Let it run. Okay? So how do I create the OCO? Dude, you need to join FX Bootcamp, man. I even give it in the training course. It's so pivotal to trading. I can't imagine trading Forex without using an OCO. Even on Bloomberg, Bloomberg put me on TV talking about what an OCO is. Like, think about how important it is. So you got to have your auto stop, right? So I've already dragged it. Here's the auto stop. You drag it on. And now I have it all the time. So okay. So I'll give you an example. Let me get off the DAX though. Let's do a different example. Let's go to Euro. Okay. And I'll show you how it works. I have an auto stop here. I have the smiley face. We can check the setting by going to the EA, open up the properties. And I have a 15, okay, so I was scalping. So let's go back to the 333 OCO. So I'm looking for a 10-to-1 risk-reward ratio. No, not really. I don't want to risk more than 33 pips. And I'll deal with the limit later. It's adjustable. I can adjust my, right? I can adjust my limit. I just can't adjust my stop. But I'll show you how it works. So I have the smiley face up there, right? So I'll show you this. Watch this. Let me get rid of this just so it's easier to see. Okay, watch this. Ready? 3, 2, 1, buy it. I'm in, stop, and limit already placed automatically. Yay! And then I can make adjustments, and then I'm like, I don't like this template. Let's change the template. Let's do a confluence template. Okay. And I say, that looks fine. I'm going to adjust my limit so it's just below the monthly target. Okay. I am allowed to adjust this if I want. Boom. See? And I'm done. See how easy trading is? Done. I'm in the trade. I got my target, got my stop. Took me nothing. Yeah, and it says, hey, do you have a link to the charts? It's all on FX Bootcamp. It's all part of your $88 membership. I don't say anything on the website. I'm redoing the website, by the way. In fact, I'm going to have to spend some time on that tomorrow. I have 4 AI projects I'm working on. I feel like I'm a venture capitalist again. I need to figure out a way to make some money, though. I'm spending money. Spending the money. I need to make the money. Yeah, but anyway, so, but I got to focus on that today because I think you might want to know that you get 200 files for free, right? You're like, oh, well, someone might find that of value. They're like, no, I won't pay $88 for 88 hours of training. But if I can get some free MT4 templates, well, damn, bro, maybe. Oh, it's not a creation. It's just it's a file. It's an EA. I know it's in the day trading course. Okay. Yeah. It was a bonus for signing up for the day trading course like 3 years ago. All right, so anywho, that's how that works. Of course, I bought it high, which is dumb. Where should I have bought it? Okay. Here. Kind of where my stop is actually where you should be buying this. That's how you trade. Okay, so this is part of risk management, by the way. Yes, day trading lesson 3. Everybody knows lesson 3. All hail lesson 3. Consult the book of trading. Turn to lesson 3, Brother Maynard. Yeah. Oh, yes. What is, all right, let me answer that a fun way. Hang on. YouTube.com/FX Bootcamp. I think it's here somewhere. Un momento, por favor. I think it's a playlist. Hang on, I don't know. Let me, or is it a saved thing? You'd think I'd know how to use YouTube, huh? And maybe it's a watch later. It is. I don't know if it's terms or the risk video. It might be this video.
Educated Investor is brought to you by DBFX from Deutsche Bank.
The retail foreign exchange market, it's fast, volatile, and highly leveraged. So before placing any trade, you'll need to understand some basic Forex terminology. There are pips, lots, and then there's the spread.
The spread is basically the difference between the buy and sell price.
The spreads are going to vary based on current market volatility. If markets are very quiet and not moving very much, spreads are going to narrow. If the markets are extremely volatile, there's fresh data out, there's major news announcements out, spreads are going to widen a little bit.
The size of the spread helps determine how much an investor profits or loses on the trade.
A spread is determined in pips.
A pip is the last point change in a currency pair.
When we're talking about the foreign currency market, even a change for the US dollar of, let's say, a half a penny doesn't seem like that much, but when you're talking billions and trillions of dollars, it's incredibly important. So we need to then have a smaller unit of measurement.
So in euro, if you're at $1.3605 and it goes to $1.3606, it went up 1 pip.
To turn the pip movement into a profit and loss calculation, all you need to know is the size of your position. In the FX market, the unit of trade size is called a lot.
This might not be the one.
A standard lot is 100,000 of any currency, and then there are also mini lots of 10,000. So with the 10,000 euro US dollar position, a 20 pip move would mean a profit or loss of $20. Once you enter a trade, you'll want to monitor whether you're up or down as the market moves. The good news is online trading platforms will calculate it for you.
Sorry, I thought
Thanks for
it's
watching
the one on
Bloomberg,
risk.
The Educated Investor. I'm Carol Biaggi.
Carol Biaggi. 2009, huh? It's the one on risk, not terms. And I don't know. I don't have that. Yeah, it's going to be hard to find that. Let me try one very quickly. Bloomberg Educated Investor Risk. And yeah, it's buried. It's so old now. Yeah, it's too bad. I thought I had them saved somewhere, but they're just gone. Lost in antiquity. Like the Ark of the Covenant. Automated. No. Too bad. Too bad. I guess maybe if I put in Forex risk, I think it's specifically Forex. Oh yeah, here it is. Bloomberg Original, so I'm going to need to save that.
Bloomberg Educated Investor is brought to you by DBFX from Deutsche Bank.
All right, so they cover OCO in this one.
Trading currencies, like many investments, can be risky business. The 24-hour-a-day market is highly speculative and extremely volatile, so you'll need to have a trading plan in place before you begin.
There's no 4 o'clock close. I need to realize that price action will continue on beyond in a 24-hour fashion, so let me understand and learn the tools that are there, like orders.
When you put in an order, the way that you manage your risk is by using stop losses and limit orders. You put in a stop order that says if things go bad, if your analysis was wrong and you start to lose money at a certain point when that stop loss order is triggered, you're taken out of the market before things get worse.
Then there are limit orders that protect you when you're making money on the trade. They are also called take profit orders.
A lot of times what people will do is that they'll see their position move in their favor and then they'll let it completely reverse against them.
McDonald protects his trades using both tools, and when one is triggered, it cancels the other. It's called an OCO order.
When I place an order, I actually place 2 different orders, a stop loss to protect me from the downside and a limit order to where my profit target is.
Another phrase in the language of FX is being stopped out.
Let's say you want to go long, you're buying, the market turns sour on you, you're losing money. You have a stop loss order in place to protect your downside. When that stop loss is hit, you're stopped out.
With a proper risk plan in place, you have a better chance of surviving losing trades and profiting when you make winning ones. Thanks for watching Bloomberg, The Educated Investor. I'm Carol Biaggi.
I had it saved, but I didn't save
Educated
it.
Investor is brought to you by DBFX from Deutsche Bank.
Anyways, all right, so there we are. So I'm in several of those. Okay. Oh, I just saved it. Sorry, I don't have the link there. Sorry. Yeah, sorry. But yeah, one cancels the other, and I've been using that forever. Okay, Joshua, what do you make a video on auto installer? Is it not working for you, Joshua? I have a feeling I know what's going on. You run it and nothing happens? I bet you I know what's going on. Yeah. Well, you're always installing it incorrectly. All right. Yeah. So you're probably installing your EAs into your favorites folder or something. Look, you have to install it into the trading platform. So what folder is that? File, Open Data folder. Okay, this is my local destination for MT4. So you have to copy that and then paste that in when the installer says, what folder do you want to install it? You have to tell it that one. And most people that, if you don't know how to use a platform or something, you probably just click next. And it's like, would you like to install this in your favorites folder? You're like, yeah, install all my files in my favorites folder. Well, MT4 can't read your favorites folder, so you got to put it in MT4's favorite folder. Okay. So that's how you do it. You just double click this, right? Select all, copy, say, install it here. And then what it does is it knows that this is here, 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 this is here. So it says it'll know to install template files in the template folder, profiles in the profile folder. Things need to go into the MQL4 area. Okay? If something needs to go in the config area, it knows how to do that. So, right, but you need to tell it where you've installed your MT4 or your MT5. So that's probably what's going on. Easy peasy lemon squeezy. Good? Is that good? Yeah? So these things are particularly good, like OCOs are fantastic for scalping. Okay, so what you should probably do if you're looking at scalping is yen is weak, Aussie and pound are strong, so maybe you want to do something like that. So you can go to your yens if you want. And we're topish here. So you could actually take this short. Now, it's not a great trade, but you could do it. So just for fun, why don't I show you a reverse? Okay. Top right-hand corner, there's no smiley face. That's bad. That means there's no EA. So I go to my auto stop. Okay. And let's do a 20 OCO. Okay, now it's a scalp. So I could save that, and I can save that setup as 20 scalp. Okay, and now I could always bring that up. Here's a scalp 1530, right? So I can choose. I could say, you know what? I like the 1530 better. So I'm just going to load scalp 1530. Boom, 1530. Oh my God, it's so awesome, Wayne, I know. Okay, so anyway, so now I got a happy face. It's loaded and bloated. And check this out. Okay, I say dump it. Boom, short, boom, boom, done, done. See, done. Oh my God, it's so awesome. Oh, my stop and my limit is set. Boom, just like that. Oh my God, you see how fast that was? Like snippety snap. Snippety snap. Oh my God. Yeah. That's how the other half trade, huh? Let's throw in some price action pivot points because we can. Price action pivot points. Boom. And then we're like, you know what? Let's keep it short of time frame. Indicator. Price action pivot points. Do 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 do. Do 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 do. Do 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 do. Do 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 do. Why short? Dude, I just explained how to throw down a trade. I didn't make a social comment. But also, why would you buy it? Okay. This is the projected target for the month. Okay, that's the conservative projected target for the month. And this is the zone, the take profit zone for the week. So again, I'm showing you how to use an OCO. I'm not making a social comment on the yield curve control, but I am pointing out that is not a good place to buy. So TT, I could say I'm hunting stops. Okay. So why would you want to scale out, Ashish? I really have always disliked the whole idea of scaling out. I'd rather have 3 stops than 3 limits. Yeah, but that's not trade management. That, to me, that's really, really weak trade management. I'm not making a comment on you. I'm talking about that strategy. You're like, you better take half off, bro. You never know. Why? You should have a solid trade plan. You should know where it's going. Bailing halfway because you're worried that you're, I mean, look, I just hate it. You're halfway to your target and you want to take half the position off. You want to cut all your winners short. I don't like the idea of it. I don't like the math of it. I don't like the lack of confidence in it. But to the downside, much better. Like, let's say you had a stop where you took 50% of your risk off at negative 30 and you took the rest of the 50 pips off at, or let's do it different. You have a 100 pip stop, 50% of the risk comes off at negative 50 and 100% comes off at negative 100. So you're like, well, if it's a bigger pullback on a shorter time frame than I feel comfortable with, I do want to take some risk off, but I'm quite comfortable with my trade plan. On the medium to longer term, I'm quite confident in what I'm doing. So you might have a 100, 300 OCO, but half taken off at negative 50. To me, that would make sense because you have confidence in your trade plan. You know why you're doing it and you know what the target is. It's just if your timing's off, you want to take some risk off too. Yeah, totally. But scaling out of a winner, I hate the idea. Sorry. And I'm a lover, man. I'm a lover, not a fighter. I really dislike it. Cutting your winner short is bad math. It's also why I never take a break-even trade. I don't believe in break-even trades. Okay, so that's where I'm coming from, right? So no. It's not SAR, it's PSAR, Richard. Yeah, PSAR. Yeah. So we can drop a PSAR on this and see what it says. Insert indicators. It might be under trend. Yeah, parabolic stop and reverse. Style, we'll make it black. Okay. And so PSAR has it here. So now, how far is it? 6 pips. I have a 6 pip stop. Maybe a little tight, huh? Maybe go to a fiver. On a fiver, it says leave it where I had it. 15 pips. Yeah, still there. So it says stay short, keep it at 15. Can I check the Nikkei? Yeah, it's up. But you're at target, right? So that's one of the things I will be doing the next couple of weeks is teaching artificial intelligence the importance of pivot profit zones. Okay, so right? So there's a lot going on here, and I have to layer knowledge of knowledge and knowledge. Basically, I'm taking AI through the FX Bootcamp training course. Okay, Dakar says, I want to sell this in July. Well, this would be your July trade. So if you were going to do that, you would start setting that up now. So like this is a pissy little scalp. It's not even worth the money to take the risk, but whatever. But if you thought head high before July, meaning the top of this market's going to be achieved between now and July, what this chart is saying is this is the right price for the down to start taking effect. It may not be the actual top, but it might be quite close. And but that by the time you get to July, okay, that would have already been the top. So like if you think down by July or in July, it'll probably look like this for July, which means if you want to look for a double top, this is the left shoulder. Okay. Or say it differently, the rest of July looks more like this, where okay, you have the right, left, and then we have a pullback, and then we try one more time next week, and then there's a lower low, and then next month, that's the July M3. Okay, so you want to start setting it up, at least psychologically, okay, Takar? Okay. Cool. Anywho, so that's how you do it. That's how you do it, bro. Here's the Japanese stock market as requested. The projected high for the month of June has been achieved. It was 33.65. We're at 33. What? No, I guess no. Sorry, 33.46, and we're at 33.60. So we're above the projected target. Okay, high risk pips, baby. Okay, but she's been a beaut, as they say. Crikey! Okay. Here's CAD yen, same trade as we looked at on the other pair. Okay. On a smaller time frame, you might be treating that like a double topsy-turvy. Okay? Up, down, up. Okay? Now lower low, lower high, boom. Now, of course, we got a Fed meeting today and it overrides everything. But nonetheless, nonetheless, it is what it is. Okay? Okay? Look at Kiwi yen, just amazing recovery. Now, here's the thing, and by the way, I was short here and ended up breaking even. Huh? Yeah, that's how you do it. That's how you lose. Okay? Anyways, this projects now all the way to 87.50. What do you stink? Smell like a plan? Dakar says the Australian stock market, the ASX, does it correlate with odd? Yeah, yeah. You don't understand why? Well, the only way for that to occur is two things. Foreigners are buying the Australian stock market, or the Australian stock market is highly correlated with their GDP. Australians calculate their GDP by adding consumption plus investment plus government spending plus net exports, right? Exports minus imports. Okay? And foreigners in that positiveness are buying lots of stuff from Australia. This is Australian exports. So foreigners buy those exports and they buy enough of it that it is a surplus. There's more exports than there is imports. China buys more iron ore and coal than Australia, right? So China buys more iron ore and coal from Australia than Australians buy wool from New Zealand. So stuff leaves Australia, and in return they get money that gets converted into the Australian dollar, and that pushes up the value of the dollar, the Aussie dollar. Okay, Aussie dollar, sorry. Pushes up because the demand for the Aussie dollar to buy those exports is increased, and because their economy is heavily focused on, let's say, natural resources. So it might be iron ore, might be coal, could be copper, could be diamonds, could be wheat, could be beef, could be wine. But they have natural resources they sell to the rest of the world. And when that is working, they exchange their natural resources for Australian dollars. So foreigners buy those Australian dollars, give it to the exporters. And when that happens, Australians are happy. They buy TVs, they buy houses, and the government, right, is generous in doing things like building infrastructure. So there would be a correlation. So when things are good, when the Australian economy is booming, ASX, the Australian stock market, benefits because some companies sell stuff for people to consume. Or people put money into the stock market. That includes the I. So instead of spending their money, rich Australians who already have a TV, who already have a car, they either buy more real estate or they invest in the Australian stock market. That's an I. I goes up. Okay? And that has to do, let's say, in this particular economy, because the Australian dollar is in demand because foreigners are trying to buy the X. X up, Australian stock market up. That's how I would explain it if I was Mean to Car. Did that make sense? So, if you were doing some analysis, you could try to figure out what X is equal to. Okay? What X equals what? And what is the change in X? Up or down? That one was a question mark, by the way. There you go. Up or down. And if you're going to trade Australian dollar, you track X. It's all about X, baby. It's all about you and me. All right, half of you have not clicked the thumbs up button. Really? Wow, it sucks, huh? All right. All right. Well, in that case, maybe we should call it quits. Yep, about 9 o'clock. So I will see you if you are a member of FX Bootcamp. And by the way, if you're like, I want to be an FX Bootcamper, how much does it cost? $88 a year. Visit fxbootcamp.com and I will see you at approximately 1:45. I'll open up the room. $2 is the release. 2:30 is the press conference. So bring some popcorn and beer, and I'll see you later. Have a wonderful day. For those in the day trading group, remember on a special event like this, there won't be a day trading event at 4 because we'll probably end close to 4 after doing the Fed meeting. And, well, you know what? Ish kaput, ja. So I invite everybody to join FX Bootcamp. Remember, there's lots of resources in the description below the video. Make sure you check all those out. And let's do it this way. Peace on earth. May the pips be with you. May your profits be above average. And I'll see you later. Cheers. Have a wonderful day. Boop, 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 boop. Oh, one last thing. That just happened.